Welcome back, investors, to Ticker Time News. I'm Adam, and get ready. It's stacking up to be an active week for investors as we look to see what the impact will be from the war in Ukraine. And my heart goes out to everyone involved. That is a nasty mess that just should not be happening. So pause for just a moment. For everyone in Ukraine, I hope you are safe, and I hope everyone there remains safe. All right, now, what will be the effects on the market this week? On energy prices? How about commodities? They should be pretty volatile all week long. Now, there's several companies, lots of companies reporting earnings this week. So a lot of big ones too, and some of them may be tied to the geopolitical landscape right now, including HP. They report big computers, right? Big in the electric sector this week. Lucid Group reports this week, among Blink Charging and several others. We got Target, Costco, a lot of retailers reporting this week, and just so many earnings coming out this week. It was tough to really narrow it down and get my focus on the ones that I'm really paying attention to. We also get Fed Chairman Powell, Jerome Powell. He's giving testimony on Capitol Hill this week, so that'll be interesting. As the central bank, it's facing a challenge right now of combating inflation without prompting too big of a hit to economic growth, and that will be a challenge going forward. The economy is slowing down right now as we speak, and of course, the war. That always causes inflation to go up, so that's just going to make it worse. So I'm glad I'm not in the Fed, because that is a definitely a challenging area to be in, especially this year and maybe even next year. Now, one of the biggest wild cards of the week will be the decision on Wednesday by OPEC on production marks. All right, are they going to produce more oil? They're going to keep it the same, reduce? What are they going to do? Right? That's going to have a major impact on the markets when we get that information. We even get jobless claims at the end of the week on Friday. That always moves the market. Okay, I'd also watch Maxar Technologies. All right, the ticker symbol is MAX, MAXR. That's the ticker symbol for them. What I've discovered this week, and I've thought about it before, but bringing it up now, a lot of news organizations will use Maxar Technologies for their satellite capabilities, right? If you have, I don't know, a news organization focusing on Ukraine, right? And they want overhead shots, satellite images of Ukraine. Of course, these are residential or commercial applications here, not military. So we can't get pinned down to what type of cell phone someone's holding in their hand like the government can. But anyways, Maxar Technologies, it's one to watch because a lot of news agencies right now are using Maxar Technologies for their satellite capabilities over Ukraine. So it's definitely one to watch. I'll be curious to see if they just had their earnings report and it wasn't too bad, but I'd be curious to see this quarter that's going on right now. And you can see this stock has been in a downtrend now for quite some time, over a year. But I'd be really curious if this quarter they don't see a spike in revenue due to all of the news agencies and everybody else who wants to cover what's going on in Ukraine and have satellite imagery. So that is one to keep on your radar going forward. Maybe not this week, but it's definitely a catalyst to watch. Okay. And again, their satellite technology is pretty good, and it's worth a look. All right, before we get too far into this, if you could smash that like button, share this video, and click that new join button to get our top 10 stocks list. And if it's your first time watching, consider clicking subscribe. All right, my friends, thank you for doing that. Now, up next is my Dow 30 pick of the week. Last week, I picked the Coca-Cola Company, ticker symbol KO. and it was not a knockout. It ended the week up 0.8%. This week, though, I'm going with AMGN. That's right. Ticker symbol is AMGN. This is my Dow Jones pick of the week. So out of the 30 stocks that are in the Dow Jones, this one I think shows some pretty good stuff here. Look at this. If we zoom in here, they are running up to a resistance area, okay? If they can break this resistance, then this will go and maybe test up here and test this high that they made back on February the 9th. All right. So they rebounded sharply on Friday, like a lot of things did, with a earnings beat on February the 7th. Also, insiders are not selling. And net money flow, the inflows are increasing sharply, with all indicators improving and several turning positive last Friday. Now, $230 to $235 a share is a key resistance area, and a price move back into the positive channel could retest $240. It's at $227 right now. It could very easily retest that 240, its high in February. So this is my Dow pick of the week. AMGN, ticker symbol AMGN. That's the one to watch for this week for the Dow. Now, the Mobile World Congress trade show, it happens this week, and it highlights achievements in mobile and other technologies. And it's all this week. The Connectivity Unleashed event will feature 5G, cloud computing, and AI updates from a long list of companies, including Qualcomm, ticker symbol QCOM, Sony, SONY, Nokia, NOK, and even Meta Platforms is going to be there. And their ticker symbol is still FB for Facebook, of course. Okay, let's get into this week's daily catalyst. Monday, February 28th, 2020. It is the last trading day of the month, so we will have a lot of volatility on Monday. A lot of firms wanting to close out positions and book that profit for the month, or cut some stuff loose and take a loss. So we've got earnings from the electric vehicle sector like Lucid, Blink Charging, and Luminar. They're all reporting on Monday. Lucid Group first, LCID. Now, Lucid Group, when you look at the chart here after it loads, from January the 28th, after its big drop, right? It really hasn't been moving a whole lot. And if we zoom in here and look, you can see it's really been capped off at its 200-day moving average, right? Somewhere about $30. It just can't break back above $30. And then it's really been hanging around a low of $25. So all of February, for the most part, it's just been holding, right? Not moving up, not moving down. Of course, excuse me. Oh, that was embarrassing. Of course, that was until February the 18th, where it dropped 5%, and then 4% the next day, and then 6% the following day. So 3 days in a row, down pretty big. But then that led to a tremendous bounce of 5.4% and 4.2%, getting it back into the bottom half of its range at $26.35. So this one is to be interesting. Holding Lucid and literally just holding it. They have got some real potential to be a catalyst for this stock with their earnings because of the potential of production updates, or maybe even new global expansion plans, or even plans to expand here in the United States. Now, bullish leaning Bank of America thinks Lucid is ahead of most of its other EV startups, right? Its other automaker peers, with the strong, and this is what Bank of America says, with a strong management team, and they see it pushing from concept to production on the range of vehicles that Lucid could come up with their engineers. So Lucid does have an estimated EPS at a loss of 35 cents. We can pull that up right here, on revenue of $36.74 million. So that's what we're looking for. Lucid is currently down about 37% year to date. So possibly earnings could make that up, right? And get people back into the green. But any bounce, any catalyst that Lucid may see this week from their earnings, I don't think it's going to be a long time trend reversal type of bounce. It would be a bounce, and then the balloon would pop and back down it went. I do believe that because of the current market conditions, the macro conditions. This is not great conditions for investing in a growth company that's got a lot of speculation on it, like Lucid Group. Now, the options market does believe there could be a 15% move up or down once the numbers are dropped. And something else that's interesting about Lucid is if it does end up popping and going up, right, off of earnings. If we measure from where we are on the close on Friday, okay, right there, and we go up to that 200-day moving average right there, that's about a 12.7% move. Now, I think the 200-day moving average would be a line of resistance that would stop the stock right in its tracks. But that is a 12.7% move to the upside if the numbers are good. If investors like the production numbers, if investors like the guidance that's being given, then we could see a short-term pop, maybe that 12% or that 15%, right, that the options market is expecting. And that would add another $3.36 to Lucid's shares, right? And that would get it close to $30, the point at which Lucid is having trouble breaking above. So this all really mathematically, it all works out. If Lucid reports good numbers, the move up 12.7% to the 200-day moving average, bringing it up to nearly $30 a share, that is just a perfect area for it to end up stopping, and then over the next day or several days coming back down. So that's a possibility, but I would definitely be watching Lucid because it's a huge momentum mover. All right, another one, staying with the trend for electric. Let's go with Blink Charging for a moment. BLNK is the ticker symbol for Blink Charging. They also report their earnings, and you can see, just like everyone else, they've been in a downtrend. Nothing spectacular here. They are reporting an estimate to be at a loss of 39 cents on revenue of $6.2 million. And I was actually kind of surprised at $6.2 million. Now, if I jump over here, BLNK, and look at the options market, the options market says there's a chance, a one-day volatility move of 14%. So Blink Charging could move 14% based off of the options market. And again, that could be up or down. And if we just measure this real quick, I won't do it for every single one. if we go to that 200-day moving average, that's nearly 30% away from that 200-day moving average. And one thing that I'm looking for in creating, I talk about this during our after hours live stream about having a shopping list. So when things hit a certain price for you, you're ready and you can go buy those things on a discount. Being 30% under their 200-day moving average, that's a pretty good discount right there. All right, so that's Blink Charging. We also have Luminar, and this is a very highly speculative stock. Ticker symbol is LAZR for Luminar Technologies. They also report, and they have an estimated EPS at a loss of 11 cents on $11.78 million. Now, in my data for the options market, Luminar is not even in it. So you can tell this is a highly speculative company. They're actually burning through cash rather quickly. But it's another one out there in the EV space. They do LiDAR work. All right, let's get into some real of the some of the ones that I'm really excited about. Workday is one of them. WDAY is the ticker symbol. Workday, I think, has a chance, right? It's got this line of resistance here on the chart that it can't break through, and it's got an estimated EPS of 71 cents on revenue of $1.36 billion. That's a good contender right there. Right now, it's not up against its resistance line. When it closed on Friday, let's see if we go up to it. It's about 5.5% away from that resistance line. So it has room to breathe on its earnings day, right? And this is, again, this is on Monday, February the 28th. All right, and then we have a special one. A special one that was a pandemic winner, but it hasn't been so much lately, and that's Zoom, right? Zoom video communication has been in a long downward trend for a while now, and we can see it on the chart. They do have earnings coming up on Monday. They have an EPS of $1.07, estimated revenue of $1.05 billion. Can they say anything to grab some attention to turn things around for Zoom? I don't know, but it is possible. I mean, if we look at this downtrend that it's been in right here, we got to go all the way back here to its peak on the 19th of October 2020, right? And it has just been down and down and down. It had a high, an all-time high. What would this be? Right around $590 or so, right? And it's down to $125. So huge discount from its all-time high. Yeah. All right. Another company reporting is HP. Now, this is one that can give us a lot of good information. HPQ is the ticker symbol. Now, HP, I really think this is a big one. They're range bound right now on the chart, but they can tell us a lot about input cost, inflation, supply chain problems, labor cost. They can tell us everything, and it's a good beacon on the economy. Now, when you see this, the chart here, this W, right, or M, depending on how you want to look at it, it is definitely range bound, and it's at the bottom of that range at 34.45. It has a top at near $40. So another $5 and it's back at the top if it can have good earnings. Otherwise, this thing could probably sink easily down to 30 and maybe sub $30 a share if earnings, if inflation catches up to them if the supply chain problems are just getting worse and they see no end in sight. So keep an eye on that one. All right, let's run through this a little quicker. Tuesday, March the 1st, we have our Chinese sector on the electric vehicle makers. NIO, ticker symbol NIO, XPeng, XPEV, and Li Auto, LI. They are all due to post their monthly delivery updates. This time around, I'm a little hesitant that there could be a slowdown, right? We had Omicron flare up in China. We had production issues. So I'm a little hesitant on this one. There could be a slowdown in the works there for their delivery numbers. And staying with the EV space, we also have Workhorse reporting their earnings on Tuesday. I just saw the question right here. Workhorse a buy. It's going to be a whipsaw kind of week. Absolutely, it is. It sure is. Workhorse, WKHS. Let the chart load here. Is it a buy? No, it's not. With our current market environment, even though this thing has come all the way down to $3.04 a share, I still think it's too speculative of a stock to buy. You would basically be putting your money into something, and your money would literally be sitting there, not doing anything for you. So that's why at this moment in time, I would say no, it's not a buy, but again, not financial advice. You have other opportunities in this market where you can actually make money with your money instead of just parking it somewhere and it just sitting there, maybe losing some value, maybe getting a couple points here or there. All right. Right now, too speculative, but it is definitely one in the EV space that I have on my radar, that I'm listening to, I'm watching, I'm reading, and I'm just waiting for any big announcement. Anything that can fundamentally change the company, that's when maybe I would think about buying at that moment. But as the company is at this moment in time, I would not. There are better opportunities. One of those could be Target. That's next up on my list. TGT is the ticker symbol. And I totally forgot to show you guys what was up for Workhorse. But earnings for Target, $2.85 EPS, and revenue of $31.33 billion. This will be a very key, a bellwether, as I would say, for the market on inflation, the input cost, wage inflation, supply chain, you name it, and Target will be able to give us some insight on. Real quick, let me back up to Workhorse, WKHS. I just want to show you what they are expected, right? What analysts think should happen. A loss on EPS of 14 cents for Workhorse again, on revenue of 75.1, would that be $1 million or $75.1 thousand? Oh boy, it's got to be seven. It's got 1,000. Yeah, 1,000. Okay, 71. Where we go? Here we go. 75.1 thousand for Workhorse there. All right. Next up, Builders First Source. This is one that I like because of the home building situation. We need more homes in America. We need homes built faster without reducing the quality of the build, but we need homes built in America. You know, the project that Disney has with building a whole, what is it, Disney living experience, right? where they're going to build planned communities with the Disney theme around it. That's a good idea. We need more homes in America. And Builders First Source, well, they're a builder's source for supplies to build those homes. BLDR is the ticker symbol. Builders First Source. I really think this one is setting up nicely. If we look here, we have an EPS of $1.88 on revenue of $4.29 billion. We've got a symmetrical triangle here. You can call it a wedge pattern. It did break both the bottom last Thursday and then broke out the top of it on Friday when we had that wild swing of a day Thursday and then that rally continuing into Friday. I'm not so sure we're going to be able to see that this week, but it's going to be a wild week, whether it's up or down. But my point is, Builders First Source is set up, and we will learn a lot from them. Another one we will learn a lot from, again, you'll see a theme here. We've got a lot of retail this week. Next one up is Kohl's. KSS is the ticker symbol. Kohl's is due in to report. They've been range bound. $2.11 EPS. Revenue, $6.58 billion. And you can see they have been moving sideways here, going all the way back to February of 2021. They have literally gone nowhere. But they have been great swing trades. They have been really good swing trades. When they get to the top of this range, you sell. They get to the bottom, you buy. It's a pattern. Can they break free of that pattern and get a rally like they did back here at the end of 2020, the beginning of 2021? I don't know if they can, quite frankly, because of inflation. There's just too many cost pressures for retailers. Another one up is AutoZone. AZO is the ticker symbol. Definitely watching this one too. They can tell you a lot of good stuff. They've had a nice uptrend. They got out of this uptrend just barely last Wednesday, and then Thursday, Thursday, then Friday, they rallied. They got back into it. Now that they're back into it, can earnings help to propel them and move them in the way of their trading channel that they have been in now for a long, long time? All right. They beat the past 2 quarters. They got ahead of themselves. The stock has pulled back. And if we look from this high right here after last quarter, they have pulled back just about 11.2%. So they definitely got room there to move if they can. Again, it all depends on supply chain, inflationary pressures, input cost, wage inflation. Same thing over and over again, right? All right, another one, not really in retail, but kinda retail investing, Sofi. SOFI. I did a video about them recently and their acquisition. I love SoFi, but this is still a speculative growth type stock, okay? So do be careful. They are up to being beat down and losing value because of that, but you can stack up more shares, accumulate over this period when the stock is down to $10.67. It was really nice buying SoFi sub $10, because I think in a few years' time, you give it 5, you give it 10 years' time, you're buying this and holding it for the long term, you're going to get a very nice return. SoFi is a company that is building for the future. I read a comment, I don't know who it was from, but SoFi is building the financial AWS, Amazon's AWS, their web servers, right? Well, SoFi is building the financial version of AWS. I believe it. I think SoFi is. And again, SoFi, though, if you are going to invest in SoFi, you got to think long term on this. This isn't a short term buy and sell it in a couple of months, long term. Now, another one I'm curious about as businesses are working scattered, throughout the U.S., not located in a office or a hub like that. You're going to need, or a business is going to need, a way for their employees to communicate and talk about customers when they're not face to face. And that's Salesforce. CRM is the ticker symbol. Now, Salesforce has been in a downtrend. A lot of technology names have been selling off. And this is, again, like I talk about in the After Hours show, every day after the market is closed, having a shopping list is very important. And if we measure from their high to where they are right now, that's a 33% discount. You go shopping at Walmart and you see the same exact hat, or at least they look like the same hat. One's 33% off. Which one are you going to buy? Full price or go for the sale or discount? That's how you have to think about stocks when they are down like this, especially stocks that are good companies. All right. That's the kind of little asterisk there. They have to be good companies. All right, moving on to Wednesday, March 2nd, we've got American Eagle. AEO is the ticker symbol. A lot of retail this week. A lot of retail. They've all been in a downtrend. 35-cent EPS on $1.51 billion. Now, in their downtrend, they are in the middle. They are in the middle of their trading channel. So we could see continued pressure here on retail. All right. I don't expect much out of this week with earnings. We may get some, that shoot up. They'll come right back down. There's just so much FUD, so much fear, uncertainty, and doubt in the market right now that even if you have good earnings, companies are still getting punished. So a lot of things in the market don't make sense right now. I can tell you that. All right. Dollar Tree is up next. Ticker symbol is DLTR. A lot of discount shopping. People want to save money. Inflation is high. It's been range bound here going back to November of last year to now. It just can't break out of this. It's got a bottom around 130 to 132 and a top around 140 to 142. For earnings, we're looking for $1.78 a share on revenue of $7.12 billion. So Dollar Tree, people are looking for discounts. They can go to Dollar Tree for those discounts. All right. Next up, Snowflake. This is a big technology name. New, hasn't been public for too long. It's starting to build its reputation. But you can go back and see. Hasn't been public too long. It all fits here on the chart when it's all scrunched up. But you can see it's pulled back hard too. It got a nice bounce back here at the end of January through the beginning of February, but it's still down too. And I think this is a good growth company right here, Snowflake. If we measure from the top to where it is now, that's a 33% discount, right? And it was even more than that when it was down here at the bottom before that incredible major turnaround on Thursday in the market, where everything was down big Thursday morning, and then people came in buying the dip. Yeah. So Snowflake, I think, is a good long-term technology play. It kind of gets tangled up there with Palantir and what they do. Palantir, though, has more government than Snowflake does. But there's some similarities there between Palantir and Snowflake. I think both are good companies. Palantir's play on getting that gold, that was definitely a good move on them. All right, going back to the EV sector for a moment, we've got ChargePoint coming in, CHPT reporting their earnings. And of course, like all the rest, they've been in a downtrend, but they are forming this little wedge pattern here, which could be good for a breakout or not. A loss of 16 cents a share on $75.87 million. And if I go over here and look in the options market, the options market is expecting a 12% swing after the numbers come out. So if they're good, we could see up to 12%. If they're bad, we could see down 12%. But that's what the option market is calling right now. And that looks fair to me for where the stock is currently sitting at right now. All right, next up, Victoria's Secrets. I've talked about this company before. It's a spinoff from another company, but VSCO. I'm going to type it over here in options, and then I'll come over here. VSCO for the ticker. The options market is going for a 10% swing on Victoria's Secret, and that really lines up here. It's made this turnaround going back December 20th of last year, and it started to make this nice ascending trading channel here. It's making higher highs, right? Higher highs, and it's making higher lows. Going all the way back to December 20th, it's making higher lows. That is a good sign. Now for earnings, we've got $2.63 a share on EPS on revenue of $2.14 billion. And again, option market sees it at a 10% swing. All right, another interesting tech name is Splunk. And the reason I find it so interesting, SPLK is the ticker symbol, is because Cisco tried to buy Splunk for $20 billion. Yeah, Cisco, of all companies, who has got tons of money right now. Cisco's got a lot of money. But Splunk is another story. The options market sees a potential 9% move after the numbers come out. It's range bound right now. It's got a lid around 122, 124, and it's sitting at 120 right now. So it's got a lid, range bound. Could there potentially be enough momentum? Right now, I don't know. The RSI says it's at a 51, so it's up there. It's got a little bit of momentum. You can look and see volume is up. Volume has been up all quarter long. The past 3 months, we've had more volume than we had over the prior 3 months. So going 3 to 6 months back, lower volumes compared to what we have right now. So big volumes there. And if you look at the news here, not a whole lot about it. It's more about Cisco than Splunk itself. All about Cisco there. All right, so that's that. Going on to Thursday, and we're almost done. We're almost done with this. But on Thursday, we've got Draftkings. All right, we've got DKNG there for Draftkings, and type it over here. All right, so we got Draftkings on Thursday here. Now, the reason I'm bringing up Draftkings, you can see big downtrend, just like all of them, just like all of them. But they had already done their earnings back there. Now, on Thursday, Draftkings is scheduled to host a virtual investor day. All right, and this is usually a big deal for DraftKings, and it has caused not only DraftKings to move, but other companies in the exact same sector and space to also move off of any good news reported from DraftKings. Now, there could be a ripple effect, right? When DraftKings comes out and talks about the sports betting sector. The presentation, it's expected to include an update on its total addressable market. So how many sports betting fans are there out there who are actually placing bets? I'm sure you heard about it during the Super Bowl, all of the sports betting taking place, record amount. So we should get the most recent data and the most recent trends from DraftKings on Thursday. Now, investors will also be looking for commentary on its market share trends and its long-term profitability track. When will DraftKings become profitable? 2023, 2024, 25 maybe? What year? What path is it on? All right. So some big information will be coming out on Thursday from DraftKings, some about DraftKings itself as a company, and some about the sports betting world and how that's going. All right. Now we go back to retail. We got Best Buy and Costco and Gap all reporting on Thursday. BBY is Best Buy. You can see their chart here. Let me load that. They have also been range bound after a big drop in their share price, but they have an EPS of $2.77 on revenue of $16.72 billion. Then I said Costco, COST is the ticker symbol. Wholesale, you go there, you buy foods. It's a very important store. It's one that I like. I like holding Costco. I like it better when you can get a discount on it, just like at the store when you're buying the food. But they have an EPS estimate of $2.75 on revenue of $51.35 billion. And then I mentioned Gap, GPS is the ticker symbol for Gap. And again, downtrend, just like everything else. EPS at a loss of 14 cents on $4.49 billion. And if you look back here at last quarter they reported 27 cents a share. 27 cents a share. And now we're looking at a loss of 14 cents a share. Inflation is causing big problems. And when we look at last quarter, they did 3.9 billion and we're expecting 4.4 billion. Okay. So there's a bit of a discrepancy there. Next up on Thursday is Broadcom. AVGO is the ticker symbol for Broadcom. Again, they had a pullback. They have a resistance line right here drawn. They right now, when they closed on Friday, they are sitting right at that resistance line. Can they break it? Will they have enough momentum, or will they fail to break that resistance line and it'll just continue to come down? So that's Broadcom there. They have an estimated EPS of $8.13 on revenue of $7.6 billion. All right. So there's what I'm watching for Thursday. Now on Friday, I'm not watching any companies for earnings. All right. So Friday is a light day for earnings. But Friday, we will get the February unemployment report, and it has got the potential to move the markets in all kinds of way, right? The non-farm payroll, let me get it right. The non-farm payroll number is forecasted to increase by 438,000, which would actually translate into a drop in the unemployment rate to 3.8%. All right. Okay. So then again, on Friday, that's really the only major thing, not watching any other companies to report, but we'll have a ton to talk about all week long with all these earnings reports coming out, especially in the EV space. Whew. So stay tuned. Make sure to check us out every day. The market is closed around 5:30 p.m. Eastern time. We go live mainly just to answer your questions. But of course, we talk about what moved the markets, and we do a deep dive or two on a few companies, especially around earnings season. We do that. And then watch out for our videos all week long. So yeah, that's what we'll be doing. So make sure to catch us then. What catalysts are you watching it for? I'll be curious to see. Put them in the comments. Let me know. Your comments always make these videos so much better. And if you did find this video to be helpful, informative, actionable, then click that like button. Share this video wherever you can. That helps us with financial freedom for everyone. And then click that new join button that's down there by the subscribe button to get our top 10 value, growth, dividend, and momentum stocks list. That's 40 high quality stocks ready to choose from that we constantly update. So click that join button and become a member. It also helps support the channel. So thank you guys so very much for watching, and I'll wrap it up for today, and I'll see you in the next video.